Welcome to Live to Learn USA, and today we're going to tackle the question of when should you buy a stock. So as an investor, one of the most complicated things is trying to decipher when is the right time to buy a stock. And today I'm going to give you the fundamentals to help you identify when's that optimal time. And first things first, I want to provide a quick intro to trends and understanding those in the stock market, because like anything else, stocks have behaviors and they tend to repeat themselves over time. So there's three main trends we're going to talk about: a bearish trend, a bullish trend, and then channeling. So what's a bearish trend? Bearish trend, if you're completely new, that's usually a bad thing. So bearish means the stock is in a downward trend. So for the purposes of today, I have Etsy stock. I did my best to chart out what their last 12 months of stock chart movement has been. So where is the bearish trend in this stock? So if we look here, bearish trends mean the stock's going down. So this would be a good sample of when the stock was experiencing bearish trend. What does this mean? A bearish trend just means lower lows and lower highs followed by lower lows. So that's just technical terms for the stock is going down and channeling downward. So if you're an investor and you see a stock in a bearish trend, you should be happy, one, because the stock is getting cheaper, and two, because you can look for the bottom of this bearish trend when you start to have a bullish trend. And that's when, right at that transition, ideally you would want to buy. So what is a bullish trend? Bullish trend is good when you're holding stocks because that means the price is going up. So this is a perfect example here. If we look at the bottoming of this point all the way to the top of the stock here, which was at 244, this period of time, the stock was under a bullish trend. Why is that? So it's simply a higher high followed by a higher low, followed by a higher high, higher low, and the stock is creating new highs and the lows are higher than the previous lows, right? Because this low is a lot higher than the previous low. So this is the time as an investor, you want to be cautious, right? You want to be investing at the start of bullish cycles, not at the peaks, because if you get too excited, follow the crowd as the stock is rising to the next planet, you don't want to catch a falling knife, and you want to buy things for as low as possible. You're always looking for deals as a long-term investor to build wealth. So the third trend is channeling. Channeling happens all the time with stocks. Amazon's a great example. Over the last 12 months, it's been range bound between this area. And where does this happen in terms of Etsy? So if we look in this range here, it's pretty clear that the stock has begun to channel in this range. What does channeling do? Channeling gives you a good idea that the stock is going to stay within a certain range. And if that's true, that means that the optimal time to buy the stock is when it's dipping low towards the bottom of its channel, because you know it has historically been going up. The market says, oh, that's too expensive, and it goes up and down. So you want to keep buying at these low points inside that channel. And that is how, once the stock finally breaks up or breaks down out of the channel, you put yourself in good position, right? Ideally, you're hoping it goes up, but if it falls down, again, you still got good price points, better than you could have, and then you can capitalize on this floor that was created again. So those are the three trends, and that should give you a good feel for how you can use those to make better decisions. So with that squared away, the next really important piece to understand is support and resistance lines. These are insanely helpful once you understand them, because they give you key information on to helping you decide when you should buy a stock. And that's what this video is all about. So let's look at Etsy stock, and let's look at starting with support lines. Support lines, consider these as giving you an idea of where the floor is on a stock. And this is essentially when the stock hits a support line. That means the market in the past has said, that's a good value, I'm going to buy, therefore the stock price will typically go up. So let's look at where that has been over the last 12 months for Etsy. So if we look here, Etsy has had a clear support line at this level. So if we look at 163, the stock market has said after this drop off, whoa, this is a good investment. We're not letting it fall any further than there. The stock price tries to break out into a bullish cycle, comes back down and channels a little bit here. But again, you have a rock solid floor being built here because the market is saying to you, that's where I would buy that stock. And if I'm not letting it get lower because I'm gonna buy because that's a good value. So this is one support line. So if I'm an investor and I see this stock drop below or to this support line out here and in the future, that's a great time to buy because more likely than not, the market is going to behave the same way and it's going to say, whoa, whoa, that's a good price. I'm going to sustain this price and go higher. So where's another support line? So another support line would be honestly right where it is today. So if you look at where the market is, this is a bit weaker because it's less time that it's hung out around that point. But looking at this, 184 is a good support line. It's a little bit weaker, but still, it's something that you can use to indicate to yourself that, hey, this stock is usually goes on an upward trend after this. So today, what happened to Etsy? Etsy fell 9% on weaker guidance than expected. So what did it do? It fell to a support line, and me as an investor, I say, okay, that's a point where I know there is some strength there, and it usually holds that price. So I have no problem buying at that price. What could happen? It could break through this line and it could begin to now channel between this next support line. So this is really your downside risk because more likely than not, the market is going to catch it at this line again. So here you are as an informed investor, you know that it typically holds there. If it would break, it would go to this, and the delta between 184 and 163, that's your downside risk. Again, anything can happen. The stock could crater to the floor. Let's say something comes out with the CEO, does something crazy, lies or something, and the stock can fall. Anything can happen, but you're looking for behavioral trends to understand. Now you understand support lines. The next critical piece is resistance lines. Resistance lines are the ceiling to your stocks, and you want to avoid investing at resistance lines at all possible. So where are the resistance lines in this? So if you look here, the stock Etsy peaked about roughly 6 months ago at 244. So this means that once the stock hit this price, the market said, whoa, that's too expensive. I'm going to take my profits because I think this stock is overpriced. Okay, so that line is pretty clear. The market said, hey, that's too expensive. Another point, if you looked in here, the market, as it was channeling through here, this is another point of resistance. So these are harder areas for the stock to break through. Let's say Etsy starts to work its way back up here. More likely than not, it could fall back down from this because, again, we started to channel here. But if you wanted to wait and look to buy Etsy, you could see it break through. And if it does break through, then you know you're starting another bull cycle and the stock could continue to go up. But you monitor the behavior to make those choices. But if the stock, again, hit 244, this would be a second resistance line where you would want to be very careful as an investor to not jump in, because what happened the last time the stock hit there? The market said, you're overpriced, I'm selling. So you need to see how the behavior of the stocks are at these key thresholds between the support and the resistance lines, using that knowledge in combination with what trend are you experiencing? Is it a bearish trend? Is it a bullish trend? Or is it channeling in this range? And if you combine all this information together, you're no longer just looking at a stock price chart and looking at the price going up and down. You can actually analyze it to drive yourself to better decisions, to get the best possible prices and predict where the stock price is going to go. None of this is perfect. None of it's an exact science. But just like the casino, if you can tilt the cards in your favor to where you think it's going to go or it's more likely to go, you're going to make better choices and end up on top in your investing career and build wealth powerfully over the long term by getting the best prices and being an intelligent investor and not just buying blindly. So thanks for listening to Live to Learn. Hopefully you got some value out of this. If you did, I'd appreciate it if you hit the like button. Helps spread this video with other people. And also consider subscribing if you want to stay up to date with my latest content. Thanks for tuning in. Take care.